are in the QBO gym, and this is where we have numerous hands-on exercises that simulate real-life scenarios that you may encounter as a bookkeeper. Each month covers a variety of new topics and scenarios, and to make it a little bit easier for you, we break it down into 4 different sections. So if you are looking to work on your bookkeeping skills, this is the place for you. And if you want to do an entire month's worth of these all on your own, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. But let's go ahead and get into today's exercise, which is coming from our October Year 1 warm-ups section. At the top here is an animated video to give you an understanding of what you, the bookkeeper, will be doing for your client Craig this month. Below that is an interactive pre-assessment quiz that relates to that video up above. Below that are all of the exercises in this section. And at the bottom here is an optional area where after you have gone through all of the exercises in this section and completed them, you will unlock some sample marketing posts that you can use on your LinkedIn to share with everyone what you have learned so far. So let's get into today's exercise where we are going to practice recording expenses. Go ahead and click on that link to have the exercise pull up for you. I have it here on the right side of my screen, so let's read through the scenario. The stump grinder's motor started leaking oil and was producing white smoke about a week ago. Craig took it to Tommy Chin, who repaired it quickly and is even willing to deliver it. Tommy charges a service fee for credit cards, so Craig pays Chin's gas and oil with checks. He left you the details along with a receipt from Hicks Hardware, a note about his visit to Squeaky Clean Car Wash, and a note about an old receipt from Tanya's nursery. Now for this exercise, you will need to click on the button under the animated video in this section to download the expense document, as you'll need it for this lesson. So if you scroll back up here to the top here, where we are here in the gym, go ahead and look, here's the animated video. There is a button here that says receipts. Go ahead and click on that to have the PDF download. Once it downloads and you open it up, this is what it will look like. Here's that old one from Tanya's. Here's one for Hicks. Here's that one for Chin's that we were talking about. And then here's something about the car wash. So you will need to be in the same session of the sample company that you did the previous exercises in. If you have not completed those yet, go ahead and click on the link on the top right corner of your screen. That'll take you to the first exercise. Complete that one and all the ones after it until you get back to this one. They all build on each other, and so it's really important to start with that first one. I have the sample company here on the left side of my screen. This is the last page that I left off of from the previous exercise. So let's go ahead and get started with this one. Craig wrote check number 70 on the receipt from Chin's gas and oil. You can see that right here. So you assume that he wants you to prepare the check for when Tommy Chin delivers the stump grinder. So here's how to do it. There are multiple ways to record a check to pay a vendor in QBO. If you are using QBO to print the check, you'll want to select the check option under the plus new button. But if you've handwritten the check, you can just use a standard expense transaction. In this case, you need to print the check for Chin's Gas and Oil to give it to them when they deliver the stump grinder, so you'll use the check transaction. So we want to click on the plus new button and then select check. The plus new button, well, let me get to the sample company. The plus new button is on the top left corner of the screen. Click on that and then under vendors, select check. And when it comes up for us in the payee field, we want to select Chin's Gas and Oil. So go ahead and click on that down arrow. It is the 1, 2, 3, 4, 5th one listed here on that. So go ahead and click on it. The bank account should say checking already. If it does not, just click on the down arrow and select it. In the check number field, we want to type 70. So go ahead and delete what is there, type 70. And as a quick note here, this payment date is going to default to today for the purpose of this exercise. It's perfectly fine. But in real life, make sure that this date is matching when this is actually being printed. So let's fill out the rest of this. In the category field, we want to select maintenance and repair equipment repairs. So if you click into it, it's currently already showing as maintenance repair. You want to go ahead and select equipment repairs. Now, the reason that this is already showing up here is not because this is necessarily what we're doing or that we want to be recording here. In the accountant settings, you have the option to turn on something that allows you to have some pre-filled data based off of the last transaction with a particular vendor or customer. So that's why it's already showing up here, and that is we can always overwrite it, and we can always delete it as well. So in the description field, we want to type stump grinder motor repair. So click into it and then go ahead and type stump grinder motor repair. Oops, repair. And if we look at this expense, it says for $185, which just happens to be what is already here. So we can leave this as is in the amount field. So let's go ahead and save and close this. Click the green button on the bottom right corner. And unfortunately, we must have already used this check. It looks like you may have already entered this check or the check number was used on another check. So we'll need to investigate this before completing the check. Let's go ahead and click on the No button because we don't want to save it. And at this point, you are still in the check transaction right here because QBO is giving you the opportunity to change the check number. However, since you're sure that 70 is correct, that's what Craig wrote on the receipt after all, you can see that we want to exit without saving. So we're going to click on the X on the top right corner of the screen to exit out of the transaction. It's going to ask if you want to leave without saving, and the answer is yes. So go ahead and click on that. So let's go ahead and find the current check number 70. There are several ways to do that. So the following that we're going to do is only one of those ways. Let's get to the vendor area. On the left navigation bar, we're going to hover over expenses and then select vendors. So here is that left navigation bar, hover over expenses, select vendors. So maybe Craig meant that he already wrote check number 70. So we're going to do the following to find out. Let's go ahead and click on Chin's Gas and Oil to view all of their transactions. So you just need to scroll down a tiny bit, and then once you find Chin's Gas and Oil, go ahead and select it. And when you do, you will see all of the transactions that are related to Chin's Gas and Oil. I'm going to go ahead and collapse this bar by clicking on the three lines and the arrow so that I can see my screen a little bit better. And upon review, you can see right away that there is, in fact, a check number 70 that was created for maintenance and repair in the amount of $185. So perfect. It seems that Craig had already entered it, so you won't need to create a new one. Perhaps you should have clarified that before jumping to the conclusion that Craig wanted you to write it. QBO won't always be able to catch duplicate transactions on its own. If you had typed a different check number, you may not have caught the errors this quickly. So now that we know that this is all good to go, we don't have to do anything more here. We're going to move on to the Hicks hardware transaction. Now, Craig purchased a water hose at Hicks Hardware for the business, but on the same receipt, he also bought a box of light bulbs for personal home use. The water hose is a connector for two of the fountains at Sunshine Family Store, making it billable to that customer. This transaction will need to be split in order to accurately record each item purchased. Because Craig is a sole proprietor for of his business, and because he used company funds for his personal light bulbs, this purchase is considered a withdrawal from the company by the owner. Even though it is for a small amount, it has to be recorded so it doesn't show up in the profit and loss statement for the company. It isn't an expense, but it will reduce the value of the company's assets. Essentially, the owner is taking money out of the company. Because it affects the company's assets, you will see owner withdrawals on the balance sheet and not on the profit and loss sheet. So you make a mental note to remind Craig about the risks of commingling his personal and business accounts. So here's how to record this purchase. In order to track Craig's withdrawals, you need to make sure there is an equity account set up. If not, we need to create one. There should be equity accounts to track the value of Craig's contributions as well as his withdrawals, but for the purpose of this exercise, you'll only deal with his withdrawals. So let's go to the chart of accounts. We're going to click on Accountant Tools and Chart of Accounts to see what is in there. So Accountant Tools is on the top, click on that, and then under Quick Links, select Chart of Accounts. Now, sorting the chart of accounts by account type will allow you to quickly see if there is already an equity account for tracking Craig's owner withdrawals. This will help ensure that you don't set up duplicate accounts. So let's go ahead and sort it by clicking on this account type field or column at the top, column header at the top here. Click on that, and now you will see that everything has been categorized by the type. So we're going to scroll down until we find equity. So scroll past all of the expenses, all of the income, and equity here is at the very bottom. You can see that there are only two equity accounts here. The first one here is that opening balance equity, which is the initial amount of money the business had the day the account was opened. Retained earnings right here tracks the historical profits of the company, so that wouldn't be correct either. Neither of these would reflect a withdrawal of money from the company by the owner, and so we need to create one. So to do that, we're going to have to scroll back up to the top here. And when we do, we're going to click on the green New button right here. You'll get this little pop out here, so let's go ahead and fill it out. In the account name field, we want to type owner's draw. So click into that, type owner's draw. This is an equity account. So in the account type field, click the down arrow, select equity. You have to scroll down a little bit to get it. There it is. And then in the detail type field, we want to select owner's equity. So click the down arrow, and owner's equity you can see is here. Go ahead and click on that. Now, for the purpose of this field, it is to, the purpose of this field is to map software used by the accountant. If you are not in communication with Craig's accountant, owner's equity is a good choice, but they may suggest a different one. It can be changed later if necessary. We're going to leave the description field blank. You have the option to use this field to enter a description or keywords of your choosing if you want a reminder of something particular about this account. Otherwise, it is not a required field, and so you can leave it blank. Plus, owner's draw is pretty self-explanatory, so I don't think we need a description here. And finally, we want to leave the opening balance and starting date blank. It will default to today, so that's perfectly fine. You can leave it as is. As you learned from the previous petty cash exercise, when you enter Craig's first withdrawal, it will create his opening balance and start date from that transaction. So we're going to leave everything as is. We're just going to go ahead and click on that green Save button on the bottom right corner. And now that one has been saved. And now let's see how this is reflected in the expense transaction. So let's go ahead and click on the plus new button and then select expense. The plus new button on the top left corner, click on that. Under vendors, select expense. And once it comes up in the payee field, we want to select Hicks Hardware. So click the down arrow, select Hicks Hardware. And again, we are going to be putting in this particular one. You can see here that he paid with a Visa. So in the account field, we want to change this payment account field to Visa. So click the down arrow, select Visa. Now, because this is something purchased as part of a special project and it isn't an item Craig normally keeps in stock to sell, you would list it under the category section, not the item details section. Note that this category may already be listed because it is the last one used for this payee, which happens to be right here. So we're going to be using this grid right here, not the item details grid, which is currently collapsed. So in the category field, let's select sprinklers and drip systems, which is a sub-account of job materials. So click into that and you can see it has already been selected for us. So we don't need to do anything more there. In the description field, let's go ahead and type 20-foot water hose. So we know what this specifically is for. So go ahead and do that. The amount of this water hose you can see is for $18.47. So in the amount field, delete what is currently there and then adjust it to say 1847. We want to click on the checkbox next to billable because again, we are going to be billing this to Sunshine Family Store. And so you need to make sure this checkbox is selected and then the customer is Sunshine Family Store. So scroll down until you can find their name and then go ahead and click on it. So we're going to record the personal portion of the expense as follows. In the category field, we're going to select owner's draw. So click into it. You can either scroll or you can do what I'm going to do and just go ahead and start typing it. And again, this is that account that we just created in the chart of accounts. So once you find it, go ahead and click on it. In the description field, let's go ahead and type owner purchased 1 box of light bulbs for personal use. Now you can either type that or you can do what I'm doing where I'm just going to copy over that text and then paste it in here just to make it a little bit easier and a little bit quicker here. Now you'll note that it is always best practice to avoid using complicated abbreviations or item numbers without a worded description of what the item was and what the amount was for. Use a description that will enable you to immediately understand what the purchase was for if you were questioned about it from 2 years from now. So that's why it is such a long description in here. So the amount for those light bulbs was $5.91. And so in the amount field, we want to go ahead and type that. So go ahead and do that. You want to double check that the 2438 shown or total shown here matches the total amount of the purchase on the receipt. So the receipt says 2438. You want to click either out of that amount so that it updates here, or you can hit the tab key. And so once you see that this has now matched what is actually here on the receipt, we're going to go ahead and save and close this. So click on the green Save and Close button on the bottom right corner. And now that expense has been saved. There sure was a lot going on with that little transaction, but by recording it this way, you've properly recorded the business expense to its correct category while also ensuring that the personal purchase is tracked as an owner's draw in an equity transaction. Or account. This maintains the integrity of Craig's business's financial records. Now that you have have everything recorded, go back and look at the chart of accounts to see how Craig's personal purchase affected the owner's draw. And you should still be on that chart of accounts page, but if you somehow navigated away from it, click on Accountant Tools and then click on Chart of Accounts. You will get back to the exact same page. Now we want to sort the accounts by name or account type. Mine is already still sorted. If yours is not, you can just go ahead and click on it. And then once you do, you want to scroll down to the bottom here until you find equity. And here we can see that owner's equity that owner's draw equity account, and it's showing that the balance is negative $5.91. Now it's negative because Craig took this amount of money from the business for his personal use. The amount will continue to increase in the negative direction whenever Craig takes money out of the business. If you use this same account for owner contributions, you will see the money go up. These changes are reflected on the balance sheet. So if you do not have a separate equity account that is specific for owner contributions, you may see this balance go up and down, depending on whether the owner is taking money out of the business or contributing money towards it. All right, so Craig's first rule of petty cash purchases is all receipts must be turned in. Craig's second rule of petty cash purchases is don't break the first rule. But as Craig predicted, the card reader that was broken when he went to wash the work truck at Squeaky Clean Car Wash, so he had to use petty cash. But he forgot to grab the receipt out of the machine. By the time he remembered and tried to double back for it, another car had already pulled through, and Craig's receipt was nowhere to be found. Since he didn't have the receipt, he just left you a note with the total, which is this one right here. Using petty cash without getting a receipt is not ideal because it's harder to justify a purchase without documentation. However, situations may arise where a receipt may be lost or just not provided. Even without a receipt, you still need to ensure every transaction is recorded in the petty cash account and that the account is reconciled regularly. So let's go ahead and record this expense by clicking on the plus new button and then selecting expense. So the plus new button on the top left corner, click on that, and then under vendors, select expense. When it comes up, we're going to go ahead and fill it out. In the payee field, let's go ahead and select Squeaky Clean Car Wash. So click the down arrow. You can scroll or type their name. Once you find it, go ahead and click on it. In the payment account field, we want to select Petty Cash. So click the down arrow, select Petty Cash. In the category field, we're going to select automobile. So go ahead and click into that and then type automobile. It actually was the second one listed on that list. So you can go ahead and click on it. As a note here, this payment date is going to default to today. You can leave it as is for the purpose of this exercise, but in real life, make sure that this date is matching the date of the expense. Let's give this a little more description. So we're going to type truck wash in that description field. So type truck wash. The amount is $19.99. So click into that amount field and type $19.99. And then we're going to save and close this. So click on the green save and close button on the bottom left corner. And now that expense for Squeaky Clean Car Wash has been saved. All right, so do you remember what you and Craig agreed to do when money was spent out of the petty cash fund? He wanted you to write a check to replace the funds. You will want to do that as well as do a tally to make sure the total is correct. Did Craig return that penny in change? And then reconcile it just like any other bank account. You'll learn how to do that during the cool down section. All right, so let's move on to the other receipts. He left you an old receipt from Tanya's nursery and said that he went ahead and entered it. For the purpose of this exercise, let's duplicate what he did. So we're going to click on the plus new button and then select expense. Once again, that plus new button on the top left corner under vendors, select expense. In the payee field, when it comes up, we're going to select Tanya's nursery. So go ahead and click into it. You can scroll or type Tanya's name. Once you find it, go ahead and click on it. We want to ensure that the payment account field says checking. So mine does say checking. Just double check that yours does too. In the payment date field, we're going to click on the calendar icon and then click the left arrow twice to go back 2 months. Finally, click on the date. So click into that calendar icon right there, click it 2 times, and then you want to select what today's date would be 2 months prior. So for me, it is October 9th, so I'm going to select August 9th. In the category details grid under category, we're going to select plants and soil, which is a sub-account of job materials. So click into that. And if you scroll down just a little bit, here's job materials. And then we want to select plants and soil. In the amount field, it says it was for $108.09. So we're going to fill that out and let's do that first. And the reason that the calendar, why we went back 2 months, is because here on the receipt itself, it says 60 days ago. So that's why we did that. So now we're just going to go ahead and click on Save and Close. That is the green button on the bottom right corner. And now that expense has been saved, and now we have taken care of all 4 of those expenses. And that is it. That's how you would record expenses. Now, if you like this exercise and you'd like to do more like it, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. We're going to continue on, and if you want to join, be sure to leave this session of the sample company open, as you will need it for the next exercise, where we practice processing the bank feed transactions. And I will see you in the next video.